Okay, Mayuresh, anything that you're recommending a buy on currently? Any two or three mid caps which you think have corrected enough or are looking strong in terms of earnings potential?
Clearly, a couple of them, Anuj. One being Transport Corporation of India. Again, our take probably within the logistics space is that the logistics space is expected to grow more or less based on the e-commerce business pie. So I think at around $12.5 billion, the business is expected to grow overall to around $17-18 billion over the next 3 to 4 years. Specifically in the case of Transport Corporation, their XPS division, the Express division is expected to do well based on e-commerce volumes, and our earnings trajectory is expected at around 17% CAGR over the next 2 years. The supply chain solutions probably is expected to grow at 21%. But clearly, I think one needs to understand that within this segment itself, I think the automotive segment has been a drag, expected to be a drag in terms of rural demand not probably catching up. So the volume story probably needs to be looked at from this division's perspective. But clearly, I think the EBITDA margins for both these divisions stand anywhere between 9 to 10%, which augurs overall for the EBITDA margins for the company. The freight division probably is not doing so well, and again I think the management focus probably will remain more on the express division and the supply chain solutions. So clearly I think in terms of the fixed assets turnover at around 5.3 times, the ROE is at around 14.5%. The business probably looks well set for the kind of growth that one probably expects with government initiatives kicking in, GST kicking in, and that will be a kicker for a lot of stocks. But again, from a valuation perspective, probably at 14 times looks pretty attractive. So Transport Corporation is something that we probably like. We're working out a target price of 295 onto the stock. One probably should invest onto this stock on declines that one sees into the market. The other stock, Anuj, that we probably like within the cement space is Mangalam Cement. Now, if I look at the installed capacity of Mangalam at 3.25 tons per annum, and if I look at the kind of realizations that the company has probably come out with, the realizations probably are expected to remain stable, and with raw material costs expected to stay benign, you will see a gradual improvement in their EBITDA margins going forward. Having said that, I think the EBITDA per ton has shown a significant amount of traction over the next few quarters and expected to remain so. So again, I think volume growth coming back, which will ensure that utilization levels probably come up, and again I think the return ratios improve. Valuation wise, again at an EV to ton of $45, pretty attractive. So I think Mangalam Cement would probably remain our preferred pick within the mid cap cement pack with a target of 360 over the next 12 to 15 months.